for Monday the 27th of November 2023. So starting on a weekly chart, and we're gonna, if we just push forward 5 minutes, once we get, we drop to the 5 minutes and push forward one 5-minute candle, and that will be our new week open, which we can see there. So we can see this new week opening gap to fill. Obviously, the new week opening gap starts at 9403 and runs down to this level where I've got the bottom, which is the bottom of the fill. Jumping back up to the weekly chart, this is what I was predicting. So obviously we've made a sweep here and we're pulling back up on the weekly. We do have this weekly fair value gap up here where our liquidity target is, and we also had a liquidity target here, but that got ran last week. So what we can see is that we created a weekly fair value gap off of last week's candle, and you can see last week's candle was a little bit choppy up and down. So what am I predicting this week? What do I feel like the market's going to do? Personally, I'm expecting price to take out the new week high, the previous weekly high, and the previous day's high, and then run down to the weekly fair value gap for a later move in the week up to the upside or into next week. What could happen is we could open, which we have, and then run down and run higher. Either way, I'm going to be bearish to start the week, depending on obviously how the Asia session plays out. On the daily, we can see we have a daily order block here and a daily fair value gap down here as well. Let me just pull that weekly fair value gap right back over here to keep everything nice and clean and clear. Right, so we got the weekly fair value gap here. We can just pull that back to there for now. And we got a daily fair value gap here running until next Friday. We pull that up to there as well. So there's our areas where we could be pushing back into. But we can see that price did dig back into this daily fair value gap already, and that's already started to make a move higher. We have also pushed off this daily OB as well, so price is potentially bullish as we go into the week. But as I said, looking at the power of the 3 off the weekly chart, we're expecting some sort of wick down back towards this OB, potentially taking out the weekly low, tapping into this area to push higher. So we drop to the 1 hour now, and we can see that we have that previous weekly low right in line with our weekly fair value gap, and we have this previous week's high here. We also have the previous day's high here, which is going to be broken real quickly. We have that previous day's high, yeah. So as we push price forward through Asia, we'll do it and in the hourly up until London. As you can see, we have actually swept the previous day's high. We've got 1, 2, 3. So that's us coming into London session now. So what we can see now is we've swept this previous day's high, and also I believe, yeah, we have just swept the Asia level as well. So if we drop down to a 15-minute chart now, it's actually left my stuff on from this morning. We'll pull that off. We can draw it back on, explain why we did what we did. So we got the Asia level has been swept, which was this. As you can see, that was swept just before the London session at 1 o'clock. And we have the new week opening gap, which was filled, so that can come off as well now. We also have midnight open. Where is the midnight open? Just here. This candle here. So we have the midnight open. We have the Asia high level swept. We have a London high created here. We've also had a market structure shift, or we're going to have a market structure shift. As you can see, we've just had a market structure shift. It's not very convincing. This move down here on a 15-minute, sorry, let's just pull that back a little bit because that was the wrong time. So we're on London. Yeah, we just opened up at London. We need to drop to the 5-minute chart now. And we are at 1:55. So going into London again. It's wrong chart time, unfortunately. So we make a move higher. potentially at this point looking to sweep this previous week's high. Then we see a move, a little bit of consolidation, coming to the 3 o'clock, and going in towards the 3 o'clock time, silver bullet hour, we see a perfect fair value gap. We see a market structure shift down here. Well, let's just come off this one, just because it's nice and clear. It's a low with a high on each side. With a high on each side, sorry. Not high. A low with a high on each side. So we have a market structure shift, and we leave a fair value gap on the 5-minute chart. Nice and clear to see. It's a nice displacement move. It's nothing. It's not a little push. This is quite a nice 3 bearish candles. We also have a tiny little fair value gap just here. And also what we can see is we have a inversion fair value gap that formed just above the 5-minute fair value gap. So if we whack that, put a 5M on there, just so we don't lose track of it on the higher time frames. So we've got a 5-minute fair value gap and an inversion fair value gap. We also have a OB here, an order block we could use to bounce off. So looking at this and the trade I took at this time, we'd swept the Asia high. Yes, we had this previous week's high above, but my overall draw today was bearish. And we're just above the midnight open if we did take an entry. So my area of interest would have been here. I would have pushed, I did push just over, so I had 12 pips just above the London high. And I was aiming for a 1 to 2. So my 1 to 2 would have took me just below the Asia level, as you can see here. And at that point, I would have been safe anyways. What can we see structure-wise at this point? We can see that we have... this won't load back in this time, but we can see that structure-wise, we have lows here, lows here, lows here, lows here, lows here. Nice, as people would call it, a trend line. This is a trend line break if you wanted to trade like that, but we don't trade like that, but people do, and that's, you want to be catching people on the other side. So as we said, we got this nice 5-minute fair value gap, this nice 5-minute inversion fair value gap, and our trade would have been placed like this, which it was. So coming into this, we know we have the Asia level just down here. We can just pull that up. In fact, we'll just whack that on Asia low, so we can see what we got, and we know that we have created a London high here. So as ICT always says, the London high will normally, the London session will create the high or low of the day, normally. It's not a guarantee, but it does happen, and it does happen a lot. When I've back tested, it does come through. It is something that does happen. So on a 5-minute chart, this is what we was looking at, and my confidence levels of hitting this trade was quite confident. The only thing that let this trade down is the fact that the DXY hadn't swept the previous day's low. So the meaning behind that is the low that was left on the DXY means the DXY still was heading to the downside, and that kind of conflicts my Euro USD downside potential, because if the DXY goes down, the Euro normally goes up. So that was something to think about when I got into this trade. So pushing the chart forward, as you can see off the next candlestick, we got a tap in. We move right back up. A lovely wick and a lovely area that was respected. So you can put that there now. We'll bring that to front. So as you can see, we've wicked up into this inversion fair value gap and the 5-minute fair value gap. And we can see that we respected this 5-minute gap perfectly under the 50% level. Pushing the trade forward, we see nice movement back towards the downside. And at this point, once I see this candle wick back up like that and leave, I mean, it moved about 5 pips to the downside and pushed back up for another tap. Once it did that, let's move this along. Once it did that, it kind of made me a little bit wary of what I wanted to do with the trade here. Equally so, like I said, the DXY was still had the downside potential. So although I expected this area to not be disrespected, so price to completely smash back up through it, I wasn't willing to leave 1% on the table if we moved lower than this level. So as price plays forward, you see we respect this level again and make a nice push to the downside. So at this point, I was running about 1% nearly, and I decided, you know what, it's best to put my stops at break even. And it was a good decision. I'm very happy with the choice. at the end of the day, there's no point leaving risk on the table, especially when you know that there is a conflicting DXY chart or news or anything like that. So for me, this was a good area to move my stops to after this move down. The next 5-minute candle played out and we left the fair value gap. So at this point, I expected price to come back up to test in here. And as you can see, we was at the last 15-minute candle coming into this. On the 15-minute chart was coming into the last 15-minute candle of the silver bullet hour. So I was expecting a tap into this area for a price to move lower to the downside. Obviously, like I said, my trade was at break even at this point. So there was really no risk on the table for me now, which I was very happy about. And I felt very comfortable with my areas and the trade, how it's played out overall. I didn't really want to leave 1% on the table. So being a Monday with no news driver and the time of year that we're in now, in November and December, we know price can be choppy. So yeah, we moved price forward. We can see we tapped in. We started to make a bit of a bullish push. Obviously remembering that we swept this level down here as well twice now. Was expecting this level next to be taken. And we seen that happen there and then got taken out. We got taken out at break even, and I believe it was because the DXY was just so bearish at this point. It's still trying to sweep for the previous day's lows and the previous weekly low. So this big bullish push took us out. But like I said, if this area, this 5-minute fair value gap, was disrespected like it was, I didn't want to be in the trade anyways. So at break even stop, the stop area was in a perfect position for me, and I'm very happy with where I actually had my stop. And the way the trade played out, yeah, I didn't make profit, but I didn't lose anything, and I had no potential risk on the table after we see this nice bearish push down. And obviously, looking at it, we was respecting order flow. You know, we did have this 5-minute fair value gap that was respected. There wasn't no breaker structure, but we respected it nonetheless. Then once we did have the market structure shift, we did have a 5-minute fair value gap here and an inversion fair value gap here, which were both respected. Price came down again, made another 5-minute fair value gap, started to respect it, and then obviously the DXY just had too much downside momentum and then pushed us back up to break even. At this point, we was around 9:10 UK time, so I actually came away from the charts at this point, just to save myself from re-entering or telling myself something that wasn't true, knowing that today probably ain't going to be high probability anyway. So come away from the charts, and as you can see at this point, I believe the charts just chopped around a little bit. So we started using that as an inversion fair value gap now, made a bigger move up, chopped around from, so we pretty much chopped around from the end of London, which is expected, all the way probably into a New York session. When did we get to New York? So still up. New York's over here. Yep, so coming into New York, we didn't really do much. We've consolidated through all the way up until now. I mean, you're talking about less than 10 pip moves all the way through all this 2 hours of trading area. So yes, we've still respected this London high of the day for now. Coming up into New York, and if we just put the chart into live, as you can see, we are very, very consolidating at this point. For me, my overall draw right now is to the downside to fill this weekly fair value gap, although I do expect this weekly high to be taken. So for me, I'm a little bit neutral right now, as I can see reasons why the chart might come up. I can see reasons for the market to make moves higher, to come back down. I can also see reason for the chart to come down, completely keep coming down, to come back up, to keep going down, all the way to that fair value gap down the bottom there, where my alerts are. But at the end of the day, it's not something I want to get involved in today. I'll let price action play out on Monday, which is today, and I'll just let that play out for now. There's no point trying to chase trades in these low probability setup conditions. For me, it's going to be a break-even day, and I'm going to leave it here.